Welcome to Traders Corner. Joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, as we do every week, we start off the show by talking about the S&P 500. And the words we've used is grinding higher. And yet, actually, if you take a sort of a step back and look at what it's done this year, it's been a phenomenal increase and not just a grind. But when you're in it, it seems to be very sluggish indeed, and we're still in it.
We're still in it, that's right. And it is grinding. I mean, when I say grinding, it's where it moves up 0.1% and then 0.2% and then 0.05%. And it hardly moves at all, but it's slowly but surely just edging higher. And there's no meaningful pullback. I mean, we've said it so many times on this show. The S&P 500 hasn't pulled back more than 3% at any stage in the last 12 months. And that's unheard of. The last time that happened was in 1914, where there was not a 3% drawdown in a year. So, I mean, we are pretty much in uncharted territory here in terms of the lack of volatility and the lack of drawdown on the US market.
I mean, why it's important is because you have an option structure. And so if the international portfolio is likely to stand any chance of making any money this year, it'll be if there's a pullback in the market. Do you actually see that happening?
Look, it's looking unlikely at the moment. You're right, we've got this put spread option structure where the payoff is illustrated on the right-hand side over here, and it works for us below 2560 on the S&P 500. Now, as it stands at the moment, the S&P is trading at about 2600, so it would need to fall by 40 points or more for us to start making money on that structure, and that's by the 15th of December, which is only about 3 weeks or just less than 3 weeks away from now. So it's looking increasingly unlikely that we're actually going to get that outcome. So it'll probably be another situation where we've paid away our premium, which is $130 in this case, and we won't make any money out of it. And that unfortunately has been the case with these structures every quarter that I've run them this year. And you know, in an ordinary year where you do get a 5 to 10% drawdown at some stage during the year, one of these option structures would most likely have worked for us. But this has been a very unusual year in the sense that we've had no pullback. Am I going to give up on these things? No, definitely not, because I think certainly going into next year and possibly the latter half of next year, you may very well find that volatility does pick up somewhat. There's plenty that I've read out there which suggests that might be the case. So I do think that in the right kind of environment, these put spread structures are well worth doing. The risk to reward ratio on them is excellent. However, it's just not been the right kind of year for it this year.
Yeah, and the local markets, there has been a little bit more volatility on the JSE, but we're still way off where we might make money on said option structure.
Yes, yeah, no, look, I mean, I've long since given up on this option structure making money for us. You can see that the payoff is down the bottom here. I mean, the futures closeout in December would need to be below 49,500 in order for that to make money. We're currently sitting at about 54,000 or thereabouts on the futures. So a 4,500 point pullback is what would be needed in order for that to make money. And I really can't see that happening. So, I mean, I've long since given up. We paid away our premium there. It was 1,549 Rand, so that's gone. We've already accounted for that. And I mean, I just can't see this making money. In terms of the structure of the top 40 future now, just technically, you can see that it has actually broken below the bottom end of that channel structure, which is drawn in over there. The move below 54,200 marks a break below the bottom of that channel structure. Now, the next major area of support comes in at about 53,500. That's lateral support over there. So we'll monitor that in the week ahead. If there was to be a bounce off of that level, that actually could line up a buying opportunity potentially for a little bit of a rebound.
Yeah, that sort of ties in with what you'd like to look at this week, although it's not a trade per se, and that's the Rand-dollar exchange rate, which I think has foxed quite a lot of people following the downgrade that we got from Standard & Poor's on Friday nights, even though Moody's held off. Yeah. But just to see the Rand well below 14 to the dollar is quite unusual.
Well, it is, and yesterday, being Monday, the day after the downgrade effectively, and the Rand strengthened by almost 3% on the day, which is not what conventional wisdom would have had you believe. And it just tells you really that the market was pricing in a downgrade to a large extent, and the market was probably en masse caught wrong-footed following that downgrade. So what you had is a situation where Standard & Poor's downgraded us, Moody's didn't, but left a sort of a negative outlook. And that probably was the best case scenario under the circumstances, because a lot of people were worried about a double downgrade and then the fact that we would then fall out of the City World Government Bond Index, and there would be anywhere between 100 and 150 billion rands worth of bonds that may need to be sold in that situation. Now, obviously, we've averted that for now, and as a result, we're not full junk status on our domestic debt. 2 out of the 3 ratings agencies have us as junk, and Moody's obviously still have us as investment grade. And the chase for yield globally is still very much on the go. So you now have a situation where South African bonds still offer very attractive yield. I mean, realistically, the risk of a default is not very great, okay? And yet you've got this chase for yield. So once again, we see the money flocking into our bond market to try and take advantage of those higher yields, and hence why you saw the rand strengthening by almost 3% yesterday.
So what would you be looking out for from this point? So what are the key technical levels? Though you haven't initiated a trade, would you rather be going long the rand or than short at this point?
Well, I haven't done a trade this week, and this is really just to highlight the levels rather than to set up a trade. What I'm specifically focusing on here is the fact that that 13 Rand 50 to 13 Rand 60 zone is quite a big technical level for the rand dollar exchange rate. You can see how the currency broke up through all of those highs in late October. That was quite a bearish break for the rand. It's now come back, and it's back sort of towards that zone now, and one might expect that is an area where you could potentially find a little bit of dollar support / rand resistance. If the currency were to break convincingly below that area, below 1350, then I think the 200-day moving average down here at about 13 Rand 30 would come into play. But I think the next major marker in terms of the journey of South Africa and what will be significant in terms of the journey for the rand is going to be the ANC elective conference in December. And we wait to see. So I expect the rand may sort of adopt a little bit of a holding pattern between now and then thereafter the thinking is probably that if we get a Cyril Ramaphosa victory, the rand will probably strengthen on that news. If we got a NDZ victory, the rand would probably weaken on that news, all other things being equal.
If the 200-day moving average is at 1330 and there were to be a Cyril Ramaphosa victory, say, where would the next levels be for the currency? If you look at this particular sort of trading history that you've got up on screen.
Well, I think that 1330 is probably the area where it would go to initially. That's the 200-day moving average. And then we'd have to see from there. It's difficult to predict this far in advance what it's likely to do. We don't even know what the outcome of the elective conference is going to be at this stage. So I'm just painting broad scenario there without knowing. I think we need to give it a bit more time to see what plays out.
Yeah. Okay. I was pushing you to sort of, is it 1260? Is it 1280? What is it, Arthur?
Look, I don't know. I can't be as specific as that, unfortunately.
Okay. Well, let's look at 2 of the trades then that have been quite recent for the portfolio. Both of them in the resources sector, and both of them seem to have worked out quite nicely.
Yes, I'm happy to report we've got 2 profitable trades to report back on this week. So first one is Exxaro. We did this about 3 weeks ago, and at that stage I mentioned that we were looking at a trading range between 140 Rand and 150 Rand, and I said that the likelihood was that it was going to break to the upside and that it would probably then see a move up to 160 Rand as a measured target. So we went long of 200 CFDs at 150 Rand and 65 cents, looking for the move up towards 160. It has been a little bit of a bumpy ride, but by and large it hasn't gone substantially below our stop loss at any time, so we've stuck with it. It has moved up towards our 160 Rand target. It didn't quite get there. The high was 159 Rand 90, and I sat there watching and thinking, come on, get there, and it just started to drift back. And I figured, it's got so close, let's just take that profit. So 159.20 is eventually where I managed to get out of that trade. So we made a reasonable profit there, 1,586 Rand including costs, which adds around about 1.5% to the value of our capital.
And actually, if you look at what Exxaro and then also Kumba, which we'll get to now, have done today, I think you'd be very glad that you sold out where you did, because I think Exxaro has moved back down to 151 or 152 Rand.
Yeah, it seems to be hovering now above that 150 area. That 150 Rand level probably should act as quite strong support on Exxaro now, actually. So if you were wanting to trade it again, it might still be an idea to buy weakness to 150 and now trade a range between 150 and 160 would be my best guess.
Yeah. So, and it's great. This is a trade that's worked out, because I know that you thought maybe 160 could go north of 160 Rand, but it didn't. So it would have been devastating, I think, to have just held on in the expectation that was going to happen and then see those profits dwindle away.
Yeah, look, this has been a difficult year. I mean, we make no secret of that. So any small profits that we can grab at now in the dying moments of this year, I'll take, because it just serves to help improve what has been a tough year.
Okay. So how did Kumba work out then?
Kumba's worked out nicely. These are the best kind of trades where they work off the bat and you earn profit almost immediately. So what we identified with Kumba was that it's in this upward trend since middle of September and further back actually. But it had that flag pattern, which is evident over there, and I was looking for it to break out above that flag and go on to 330 Rand as a target. So we went long on the move above 300 Rand. We bought 100 CFDs at 301 Rand and 20 cents, stop loss 290 and target 330. And I'm thrilled to say that it got to 330. I think the intraday high was about 334, if I'm not wrong. We had an auto sell order in there at 330, so I traded and we managed to bank 2,754 Rand on that trade after costs. So another nice one. That's about 2.7% that we add to our capital, and it's nice to report back another profit here.
And especially nice also because Kumba's come off quite sharply today, and I think it's trading at about 311 at the last time I checked, well, when we recorded the show. So it's back in the sort of 3 teens.
Yeah. So another example of why it's been good to bank the profit and just lock it away quickly.
Okay, so what do the portfolios look like? Because the South African portfolio is looking a lot better, unfortunately, than the offshore portfolio.
Correct. So the South African portfolio is looking somewhat respectable. It's up 14.5% now for the year. So this is actually a new high for our portfolio for the year to date. So it's quite nice to be moving towards the end of the year on a high note. You can see the profits that we made on both Kumba and on Exxaro over there. And then the offshore portfolio not looking great, unfortunately, still down 10% here. And a large part of the reason for this is that I've been pretty fixated with these put spread structures, and every quarter we've done one and we've sort of paid away between 1 and 2% of our portfolio in an insurance premium looking for the pullback. The pullbacks just haven't come, and as a consequence, it's eroded our portfolio throughout the year. And we will discuss this in a little bit more greater depth when we actually review the year and look at where the profits and losses have come from on the respective portfolios.
Because I can see the criticism being that you took these structures as insurance, but then didn't really trade against them and didn't do much more active trading in the offshore portfolio.
Yeah, absolutely right. I think there's a number of lessons to have been learned from the way I've traded the offshore portfolio this year. One of them being that I actually simply haven't been active enough. And I think next year we need to address that a lot more thoroughly. Yeah.
Well, I suppose we've got, what, 2 or 3 shows? 3 shows until the end of the year. So we will be wrapping up the year that was, and hopefully there'll be a little left over for charity. Unfortunately, it's going to be one of our worst years in the history of the show, but we will be getting to that. And Garth, and just a reminder that for the last couple of weeks of the year, people can still get a weekly alert.
Yes, if you go to traderscorner.co.za and you click on the middle of the page there, you'll see a link for a free weekly email. Click on that. It takes 2 minutes to register your details, and then we'll send you an email once a week on a Tuesday detailing what is coming up on the show for that week.
Great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.